Hello and welcome to another episode of the Economic Insider with Garofola Analytics. I am your host, Nino Garofola. Today we are going to be reviewing the top 3 news items that happened this week ending March 2nd, 2018. We got some good ones on deck, so let's hit the ground running. So first on our agenda today is newly installed Fed Chairman Jerome Powell gave his first ever testimony to Congress as the new Fed Chairman. And you could tell he was feeling the pressure of all those eyes in the financial community finally being upon him. And, he made some interesting comments, but I'm not sure that he fully meant to telegraph some of the stuff that he said, but it was interesting nonetheless. And what he essentially said is he hinted that we should start seeing one additional interest rate increase from the Fed this year in 2018. Now that would lead us from 3 rate increases that we've been expecting to 4 rate increases. And this would bring a federal funds rate range from 2.25 to 2.5% by the end of the year. Now, also in his testimony, he mentioned that he does not see labor markets overheating in the near term, and he sees enough slack to make decent gains in employment without wages causing crazy inflationary pressures. Now, this actually leads us into our next item, and that is the employment situation, specifically jobless claims in February. Now, in February, jobless claims hit a 49-year low of 210,000 claims being filed for the month. And we see this as a validation for what we have said for the last 2 months, specifically that the employment situation is tightening and we should expect wages to continue rising at a higher pace than we have seen over the past few years, and a lowering of volumes as the year progresses, of hiring volumes as the year progresses. Finally, what we're going to be looking at is what roiled markets on Thursday, and that is the Trump administration's plan to slap a tariff on both imported steel and aluminum. Now, unfortunately, this is brutal news for pretty much everyone outside of politics. And what we are going to be seeing is prices going up for those that rely on steel and aluminum. And we're also likely going to be seeing a decrease in exports from the United States as countries are likely going to be retaliating. Now, protection versus globalism is one of the most widely misunderstood topics in economics, and its misperception can essentially be chalked up to a misperception of trade in general. Now, the simplified idea is really no more complicated than understanding household trade and trade among smaller communities. And how we can explain it is the more expanded area you reach with trade, the bigger your volumes can be. And the bigger your volumes can be, the lower your prices can be. And the better you can reach those, and the better others can reach you with cheaper goods as well, with things that you desire. Now, obviously, the idea is a little bit more complicated than we can fit in a 5-minute video segment. But to prove a point, I'm going to refer back to a research report we did around 2 years ago on the impact of NAFTA. In the 5 years following NAFTA versus the 5 years before it was passed, exports grew by 45%. During those same periods, disposable income grew by 6.1% in the 5 years prior, and in the 5 years after, it grew 14.3%. Now, manufacturing is always pointed to as the biggest loser in these trade agreements, and is usually pointed that we are losing manufacturing jobs. And the truth is, the U.S. is losing manufacturing jobs, but it's losing it to innovation. And it has been happening since the 1970s. But what's interesting to note is that there have only been 2 5-year periods since the end of the 1980s that have produced a net positive increase in manufacturing jobs. And one of those periods is the 5-year period immediately following the passing of NAFTA. Now, it's probably going to come to no surprise to you after hearing all these stats that manufacturing in the U.S. increased 23% in the 5 years after the trade agreement was signed. versus a mere 8% before. Bottom line with all this, trade boosts the macroeconomy, and the farther we move into protectionist policies, the less we can expect overall from GDP. That's going to be it for this version of the Economic Insider. I'm Nino Garofola. Thanks for watching.